Hey, good morning, everybody. This is Ryan Sean Adams. I'm today's moderator. We've got the ETH report for Q2 coming right up. This is a quarterly report. This is being live streamed both on Bankless Twitter, I should say X, I suppose, and also YouTube. What are we doing here? Why are we doing this? So imagine if Ethereum and ETH asset had a quarterly report for token holders. That's what the ETH report for Q2 is. And imagine if there was a quarterly earnings call, I put that in quotes because it's a crypto network, of course, but an earnings call that was presented on the back of this report. That's what you're listening to right now. Please note that you guys can access the ETH report for Q2 at the DeFiReport.io. There'll be a link in the show notes here. I'm sure you can access this. I am the moderator in today's ETH report. I also have Michael Nadeau, who is the author of the ETH report. I'll introduce him a little bit more in a second. First, a little bit of housekeeping before we begin. The data provided on this earnings call is compiled from public on-chain data sets prepared by the DeFi report and also additional partners affiliated with the DeFi report. It's provided as a public service. This is not a report nor affiliated with the Ethereum Foundation at all, and it is unaudited. But of course, all these data sets are on chain. The call itself, this episode, I guess maybe we'll call it, is being recorded right now, and it'll be archived on Bankless YouTube within the next 24 hours. So you'll be able to access it there. Also, if you're in the audience today, you can ask questions. The way to do that is if you're on X, you can just leave your question in the chat room. One of our other moderators will kind of filter some of these questions and get it to us at the end of today's call. And also YouTube, you can leave your question in the chat room. We'll try to pick it up. I think this will run for about 45 minutes. First, we'll do some opening remarks. Then we'll get into the state of the Ethereum network itself. Then we'll do the Q&A and close it out with some remarks. I want to start by introducing Michael Nadeau, who is the author of the ETH report. And maybe, Mike, I'll just ask you a question so you can dive right into this. Why are we doing these quarterly reports?
Thanks, Ryan. Appreciate it. Excited to be here. Why are we doing the reports? We're doing it for token holders. This is all about objective research and transparency into how these networks work. We want to make it really clear for token holders, not only to understand just the network fundamentals and how value flows through these networks, but also to the tokens themselves. And really that is the theme of this report.
All right. So we should also say before we begin that today's Q2 ETH report call is powered by Bit Digital. That is the ticker BTBT. It is a public company. They just went all in on Ethereum in a big way. It used to be a Bitcoin mining company. They sold their Bitcoin. They added $172 million in their raise, and now they're holding about 100,000 Ether. And they're staking it on institutional grade validators so that every block streams fresh rewards straight to the balance sheet and to, of course, shareholders. Thanks to Bit Digital for that. They're a huge supporter of Ethereum and our work here on the ETH report. You can learn more at bit-digital.com. Okay, Mike, let's get into the opening remarks and kick this baby off. So I got to ask you, when you look at Q2 and you look at all of the metrics coming at you, what were some of the highlights for Ethereum?
Yeah, so I think, over the last few years, Ethereum's been in this state of transition where, building out the layer twos, scaling users on L2, and really kind of what we've been tracking is how value is flowing through the network as a result of this. And so I think, to me, the big highlight of Q2 is the Petra upgrade that took place on May 7th. And we've got some charts that we'll go through here in this call that really highlight what's happening in the network as a result of those upgrades. So user activity on L2s is growing. So that's something that we consistently see. We see costs dropping on L2s. And we also see this resulting in less value flowing to ETH holders as a result of that. And that's sort of, to me, like we're still kind of in this sort of J curve of kind of this transition that Ethereum's making in terms of scaling out the roadmap. So we're going to go through that, and people will be able to see sort of how network upgrades impact value flows throughout the network and user activity throughout the network. And then we're going to go through stablecoins. We've got some other charts here just showing what's happening in DeFi. There's a lot of active loans in DeFi. Things have really picked up in Q2. But to me, the theme of this is network upgrades, user migration to L2s, and we're going to cover sort of what that means for ETH holders as we go through this report.
All right. So as I mentioned, you can access this full report at the DeFiReport.io. There's also Dune dashboards accompanying all of the charts that you're about to see. If you want to go access them, I think you just search the ETH report in Dune right now. It's probably trending up there. So if you're an analyst type, you have access to all of those as well. All right, Mike, let's get to the state of the network. Let's start with some of the operating performance metrics for the Ethereum network. And maybe we'll start with real economic value. So what did we see in Q2?
Yeah, so as noted, users are migrating to layer twos, and the result of the Petra upgrade caused an 80% drop in blob fees for the quarter. And we also saw a 67% drop in base fees, a 52% drop in MEV, and a 24% drop in priority fees. For the quarter, we had $144.8 million of REV. That was down 53% from Q2. And just so people know sort of the components of what's making the up the real economic value, that's coming from base fees, priority fees, blob fees, and I'm sorry, just base fees, priority fees, MEV, and blob fees. The blob fees are making up about 1% of that right now. Ultimately, we think that's going to scale, and we're looking for that to start to creep up towards 10% or so. The base fees are about 34% of REV in Q2. The priority fees were 37%, and MEV made up 29%. Again, this data, we're focusing on just what is going to impact value accrual to token holders with this data here.
Okay, and this manifests, of course, in real on-chain yield. So what's this?
Yeah, so we're tracking just the amount of the payments that go through the network that are just coming from users here, right? So we're just looking at MEV and priority fees that accrue to token holders via staking. So we're not counting any of the block builder payments that are kind of off protocol revenue that would not make their way to token holders. The real on-chain yield, the average APY for the quarter was 0.4%. This is making up about 12% of the total yield that ETH holders are getting through staking right now. The reason that, that was down about 28% for the quarter. And the reason for that is because of the priority fees were down 24%. MEV tips were down 52%. So as you know, the network picks up steam, more users come in, there's more state contention for transactions. We see MEV pick up, priority fees pick up. That impacts the real yield for token holders.
Keep going and talk about total on-chain
Yeah.
yield.
Yeah, so total on-chain yield, we're just adding in the issuance here. So now you've got the priority fees, the MEV plus the issuance. Issuance was down 5% in Q2. The reason for that is the ETH issuance represented about 88% of the total yield. We mentioned that the priority fees MEV were 12%, so the rest of that is made up via the issuance. Issuance was down about 5% for the quarter. Again, that is as resulting from the priority fees being down 24%, MEV tips down 52%, and issuance up 2%. So.
All right. So overall, your analysis for why this is happening, we've got some network upgrades, making blob space less expensive, and maybe some of that is filtering into layer two, the layer two ecosystem, and the growth story here. So should we begin talking about that?
That's right. I think we just kind of covered sort of the result of what's happening with Petra upgrade. You know, fees are dropping on L1, and we can get into the layer twos. I think this is where the growth in the ecosystem's happening, and we're just kind of waiting for that to catch up in terms of value accrual to the ETH holders. So this is looking at combined active users on L2, which is almost 2 million per day for the quarter in Q2. That was up 17% from last quarter. The primary drivers of this are Unichain. So that's very interesting to see. Unichain launched pretty recently. They had 438% growth
Hmm.
in terms of active users in Q2. Base was up 26% as well. And I think the big takeaway here is that L2s are now driving about 5x the daily active users of L1.
Fascinating. Okay, so some user growth on the L2 side. How about transactions?
Transactions up as well. So again, users are migrating, more users, more transactions on L2s. L2 transactions, these are combined transactions for the L2s. 16.9 million per day average. That's 12.7x higher than what we see on L1 today. So that continues to scale up and grow. The primary drivers of the growth in Q2 were primarily Unichain, as I mentioned before, WorldChain as well, up 60% in terms of transactions. Starknet was up 50% in terms of transactions. Optimism was up 11%. Arbitrum was up 6%, and Base was up 3% on the quarter.
How about this story of smart contracts?
Yeah, so this is a metric we like to track, and again, all of these metrics have been curated over 4 years of us working in the industry, partnering with a lot of these data companies as well. This is a metric that is looking to track the diversity of kind of user activity in terms of smart contract interactions across the layer 2 ecosystem. And we can see this was down slightly in the quarter, 13%. But we can see that chart is in a secular uptrend there. And L2 smart contracts, in terms of the number of interactions, are 5.7x higher than what we see on L1 today.
Okay. L2 on-chain margin. What does this reflect?
This is showing, we mentioned the Petra upgrade. To me, that's the big story of Q2. And what this is showing is you can kind of see the line there kind of levels off around May of this year. And that is the result of the Petra upgrade and how that impacted the on-chain margin for layer 2s. We're just looking at Base in this chart. And this is essentially just measuring the user fees that Base collects from their users, and then the rent that they pay down to L1 in terms of block fees and L1 payments. And they're just under 97% margin for Q2. That was up 2% over Q1.
So that's essentially their gross profit margin, just showing there are some very profitable L2 businesses in the space.
Just purely on chain, and yeah, 97% margin is pretty good.
That's nice.
Yeah, yeah.
How about transaction fees? What's that showing for users?
So again, this chart I think tells an interesting story. You can see it just like fall off a cliff there in March of last year, and that's related to EIP 4844. That was the first introduction of blob fees, reduced costs on L2s, also reduced value accrual in the interim down to L1. The average transaction fee for L2 users, this is across all the L2s that we track, was about a penny and a half during Q2. That was down 50% from Q1. So significant reduction with, we mentioned previously the transactions, the users are up. So you have costs actually dropping as user activity is scaling. I think that's pretty interesting. And we're sort of just waiting for this activity to continue to scale to the point where we start to see it impact those metrics that we showed at the beginning of this call.
That's fascinating. It almost seems like the Pectra update is sort of a stimulus to the L2 economy, and you can see that in user growth, and you can see that in the reduction of user fees. Let's switch to Ether, the asset itself, and talk about some token economics. What's the story behind ETH issuance in Q2?
Yeah, so I think people will notice this in the report that we put out. So we think there's like a number of different ways that ETH accrues value, and we showed you sort of the yields and the actual real economic value in the beginning of this. There are other components here. We're going to get to we're getting into the tokenomic economics now, but there's a flow here where basically stake rate and activity on the chain then impacts token economics, which can also impact the store value elements as well. So from the token economic perspective, issuance was up 2% in Q2. This is related to ETH. The reason that is up 2% is ETH staked was up 4%. So there's a non-linear relationship between the amount of ETH being staked onto the network and then the amount of issuance that gets paid out to those stakers. And that's really what kind of drove some of that issuance. 2% is kind of interesting. We think there's some capital rotation coming from exchanges into ETH staking, and the percent of ETH staked on the network is actually at its all-time high in terms of ETH supply currently. But issuance up 2%. This helped offset some of the reduction in the real on-chain yields, so that the total yield didn't drop as much in Q2.
I see. And that issuance is that I don't know if you have the metric here, but if you annualize that, are we at about 0.45%, something in that range?
From an annual perspective, I think so. So we measured it on a quarterly perspective and just took the average of Q2. It was about 0.73% in terms of the full net dilution, which we'll get to in a minute here. But yeah, I think that's probably accurate. The 0.45 for doing a full 365-day look back.
Talk about the ETH burn ratio as well.
Yes. So ETH burned again. This is an interesting chart. We saw the drop off in terms of L2 user fees in the chart before. We also see a drop off with ETH burned as a result of this, and that started really in March of 24. And for the quarter, we were down 55%. 21,351 ETH were burned in Q2. And this is primarily, again, the drop this quarter of 55% is primarily due to the Petra upgrade once again.
When you zoom out and look at the circulating supply, what are we seeing in Q2?
Yeah, so supply was up just slightly, so 0.18%. Very minimal increase in the supply there. We mentioned that the issuance was up a little bit. There is some burn that's obviously offsetting that a little bit, but this is really related to the base fees being down 67%. That impacts the burn on the network, and so that's the reason why we weren't deflationary for the quarter. But you can see that the token economic policy works pretty well. Even when the network is easing a little bit, we're still kind of staying below that like 1% or so target there.
And net dilution rate, what does that show us?
This is showing the difference between your issuance and your burn. And so net dilution is the actual amount of ETH on an APY percentage basis in terms of diluting, ETH holders that are not staking. So this only impacts you if you are not staking your asset. And as I mentioned, the average APY in terms of the net, not APY, but the average inflation for the quarter was 0.73% annualized. That was up 0.64% from Q1.
I know we're not offering forward guidance in the ETH report for Q2 going to the future, but when it comes to kind of this gets into maybe the next section. When it comes to this line here and kind of circulating supply, what are your expectations here for circulating supply? In the early years of Ethereum, issuance was much higher than it is now. Post merge, post Pectra, post other upgrades. Do you think it kind of oscillates around this 120 million number? It goes up a little bit. Any expectations there?
I think so. I think what we've seen in terms of the burn dropping, 80% in Q2, it feels like we're probably at the lower level of that. And so I would expect, we may have bottomed in terms of like the net dilution that we just showed. And this chart, as you can see, it really does level off starting really when we had the merge. And so I expect it's probably just going to sort of oscillate kind of around that 120 line there as we move forward.
All right, well, let's talk about the next story for Ether, the asset here, which is the store of value story. ETFs, what did that look like in Q2?
Yeah, so a nice bright spot here. We're moving into some metrics here that we track from store of value perspective. And what we saw here was 20% increase in terms of ETF assets under management. And the major driver of that was the Fidelity FETH ticker there. And so this tells us a little story here. We've also seen some capital, looks like it's moving off exchanges. We think it sort of suggests that capital is moving from centralized exchanges. People are swapping into the ETFs. And we think that is strengthening ETH as a store of value.
How about the treasury story? This is not quite ETFs, but it is another publicly traded entity. What is this?
Yeah, this is some data that we're tracking from Strategic ETH Reserve. And this is showing really just the increase in treasury companies that popped up over the last quarter or so, up to 1.9 million ETH in treasury now. And some of the drivers of this have been Sharplink Gaming, Bit Digital. We also have seen just a number of other entities that have just started treasury strategies. This includes 48 different entities, across the ecosystem that have a treasury strategy in terms of acquiring ETH.
Uh, ETH percentage in smart contracts. What's the story here, and how does that relate to store of value?
Yeah, so it's just off all-time highs here. We were down about 4% for the quarter, and this is driven by ETH staked, which about we're at about 43% in terms of the total supply that's in smart contracts. About 29% of the supply is in ETH staking currently. So ETH staking actually rose during the quarter, but the total supply in smart contracts came down slightly. So it suggests a little bit of a capital rotation potentially out of DeFi TVL, that maybe went into staking. But this is just telling us that people have confidence in the protocol in terms of moving money into DeFi using ETH as collateral, and also into staking contracts.
Now, more ETH, it looks like, is moving on chain, or at least off of exchanges. What's the ETH balance on centralized exchanges tell us?
Yeah, this, as mentioned, seeing a little bit of capital rotate. The balance on exchanges is currently down at its lowest level since July of 2016. Of course, we're seeing the amount of ETH and ETFs rise as that's happening. So we think there's a little movement, just a swap happening there. The amount of ETH and ETFs is now 3.4% of the total supply. So we continue to see that movement. And we think also there's just capital that's flowing into DeFi as well, and looking to use ETH as a collateral asset. And we think that's strengthening ETH as just really the capital efficiency of ETH as well.
Looks like July 2016. This would look like 8-year lows then on ETH balances on centralized
Correct.
exchanges.
Correct. Yep.
Let's dive into some of the network fundamentals here that you evaluate on the ETH report. So this is a measure of GDP. So tell us about this.
Yeah, so GDP is measuring the sum of all the fees for the applications on top of just the Ethereum L1 here. And GDP for the quarter was about 1.7 billion. There's about 108 apps that are being tracked here. This is data from Token Terminal, and we just think this gives you a pretty good indication of sort of the health of the economy built on top of Ethereum L1. And you can see that is in pretty much a secular. There's some volatility of the chart, but it's in a secular increase. And what's interesting here is that this number can increase even when value accrual to ETH, as we showed at the beginning, is sort of dropping. And you can see sort of the network is scaling, I think, as planned, and creating a better user experience for users on L2s. That is leading to more value accrual for the apps on top of Ethereum L1. Some of the drivers of the 15% drop for Q2 were from Circle and Tether, which actually increased a little bit. Their fees are coming from the stablecoin supply and the interest payments that they receive on that. Lido was down 25% for the quarter. Aave was down 32%, and Uniswap was down 34%, primarily due to a reduction in just speculation on chain and just on chain activity in general.
And this is Ethereum layer 1 GDP, not inclusive of Ethereum layer 2 GDP.
That's correct. That's correct.
Okay, what's the story behind real world assets on Ethereum?
Yeah, so a good story here, I think, for Ethereum, and also moving forward. This chart does not include stablecoins. We track those separately, but we're tracking, U.S. Treasury debt, private credit, institutional alternative funds, non-government U.S. debt. We've got public equities on here, corporate bonds, commodities, and there's about $7.5 billion of real-world assets currently on Ethereum. And that was up 48% during the quarter. The drivers of that were primarily coming from U.S. Treasuries, which were up 58%, commodities up 24%, and alternative assets up 40% on the quarter.
Staked ETH, what's the story here?
Yeah, staked ETH, as mentioned, it's at all-time highs right now in terms of the total amount, and also the percentage of ETH staked as a percentage of the circulating supply. so 35.6 million ETH, and that was up 4%. The primary drivers of this, Binance was up 27% on the quarter. EtherFi was up 18%. Coinbase actually down offset by Coinbase being down 6% on the quarter. And Lido's market share actually dropped 6% in Q2, and most of that went to Binance.
Another good story around total value locked, and I think we're coming up to active loans here. So let's talk about that.
Yeah, so TVL, this is tracking, just all the value of all assets in DeFi protocols. 63.4 billion of value as of 6:30. That was up 33% on the quarter. And the primary drivers of this were Aave, Eigenlayer, Lido, and EtherFi. The thing that we'll mention here is that the TVL is reflexive of the ETH price as well. So ETH price being up 30% also helped to drive TVL up a little bit on the quarter.
Yeah, and I know the full report has some fair value metrics that look at, is it TVL ratio with market cap as
Yep,
well?
yep, yep.
Active loans on Ethereum.
Yeah, so active loans, a bright spot here. Active loans are at an all-time high on Ethereum as of 6:30. $23.9 billion of active loans. That was up 43% on the quarter. Maple Finance, big bright spot of that, up 291% in Q2. Euler Finance was up 174%. Aave was up 46%. And Morpho was up 23%. And just a note, sort of in terms of the amount of those loans that are on the L2s, it's about 10.8% of total Ethereum L1.
Very good. All right. For all participants, we're going to move into questions in just a minute. So if you have any questions, do send them either in YouTube chat or on X, and somebody will relay them to us. We'll just go for a question or two. Maybe if there's more, then we'll continue, and then we'll close it down. The full report has some fair value metrics as well. And so again, if folks are interested in getting the entire ETH report for Q2, go to the DeFiReport.io and you can download that. Maybe as we end this portion and get to questions, Mike, I want to ask you again, sort of the strengths for Ethereum to the quarter, what you're seeing when you look at all of these metrics, and what you think token holders should take away.
To me, the big takeaways are the Petra upgrade, the fact that the network is making technical upgrades and improving user experience, and I think you're looking to see new applications come in, and basically the technical capability of these L2s getting to a point where developers can come in and start to build some new stuff. So that's what I'm looking for, is to see an expression of all of these upgrades in actual, new apps that are driving users. It is a positive sign to me that as the network makes these technical upgrades, that we're seeing activity increase on L2s, and so that's a bright spot for me. And also the fact that you have the ecosystem and the economy on top of Ethereum L1 growing as like the user experience and as the economics are actually improving for users. And so I think over time, what I'm looking for is just to see more volume, and to see that start to accrue down to ETH holders via the real yields as well. So.
Well, great. All right. Now we're going to answer a couple of questions. And I'll just say about this that this gets into more kind of the analyst opinion section of the discussion. Everything that has been presented so far, you've just derived based on on-chain data, and has been very objective and neutral. But in answering some of these questions, we might have to get into opinion territory. Is the first question from Wants to Comment. How much should ETH Layer 2s pay mainnet for burn to cover issuance? Would that imply an L2 gas cost hike? So how much should L2s actually be paying mainnet to cover issuance? Any thoughts on this question?
Good question. I think this is the $1 million question out there. I think right now, and to me, that's a question for the Ethereum Foundation to deeply understand, and how that impacts L2. So I think there's a line at some point where you need to be able to create the user experience and really provide value for these L2s. And Ethereum is a product, and that the value of that product, I think, eventually will meet where supply, where the market wants it to meet and what the market wants to pay for. But in terms of like ETH actually accruing enough value to support its staking ecosystem, to support its token holders, I think this is just going to work itself out over time, and it's unclear, what that margin should be for Base. Right, Base's margin is 97% right now.
Hmm.
Should that come down a little bit? Like, should there be a negotiation, there at some point? We know native rollups are something that Ethereum is pushing for, and I think this is going to get sort of solved as native rollups come out and as the network continues to mature.
I'll take my moderator hat off for a
Yeah.
second and give a take here too. I do think very much it depends as a token holder on what you think of Ethereum's strategy with respect to this, and there are like two ways to view it. Like the one more negative way to view it is like, oh, L2s are getting away with murder, basically. These are sucking value from ETH token holders. Okay, so that's one framing of it. The other framing of it is basically, no, this is what networks do when they want to stimulate their economy and drive usage. And so, what we've seen in some of these numbers is effectively upgrades that make it cheaper and cheaper for users to transact on layer twos. And that is a good thing. And the idea, I think, that Ethereum or Ether, the asset, sort of makes up for that as a store of value asset instead. If you continue to see kind of the treasury story continue, the ETH ETF story type continue, other representations, ultimately price continue, that ETH is a store of value, then I think you have greater confidence that that's what's happening. Basically, Ethereum, the network, is subsidizing cheap transactions, and it's not going to be profitable for some time. Blob space is going to continue to 2x, 3x basically every year, and the asset itself, either the asset itself makes up for it as a store of value asset. That's kind of what you want to look for as a token holder, I think. Here's another question from Dr. Manhattan. How should we think about the difference between Bitcoin strategy companies like MicroStrategy and potential Ethereum strategy companies like BMNR? What metrics or frameworks can we use to measure and compare them? So, Mike, have you done a deep dive into any of these treasury companies yet to be able to compare something like MicroStrategy to what Tom Lee is doing, what Joseph Lubin is doing, what Bit Digital is doing, any of that?
So haven't actually compared them to against each other or looked at. I think, to me, looking at the ETH strategy companies or looking at Bitcoin treasury companies, you're looking at the sort of how much of the token is accruing to you as a shareholder, and I think that's the goal of a lot of these treasury companies, is to uh, continue to acquire ETH and to have that increase in terms of ETH per share for their shareholders. To me, that's probably the key metric there. But in terms of comparing it to MicroStrategy, I think you got two different assets here, and so if you are analyzing Bitcoin, you're looking at MicroStrategy. If you're looking at ETH and you want exposure to ETH, then you're going to look at some of these ETH treasury companies.
They all kind of operate in a similar way, would you say?
I think so. I think so, and they're all trying to accrue as much value to their shareholders through ETH, as possible, and that's ETH the asset, and also through staking and providing validator services as well.
Yeah, I agree with that. And I think the TradFi credit mechanisms that they use are pretty similar across these entities. Basically, some of the ETH treasury companies are quote unquote just copying the Michael Saylor MicroStrategy playbook. One other avenue that is maybe more unique to Ether versus Bitcoin is some of the on-chain yield sources. So, of course, staking is the obvious one, but then you get beyond staking and you can generate some yield that way and increase your ETH per share. But of course, when you're going and chasing the yield, things can get a little risky out there, and you could put your principal at risk, and that's something to look out for as well. Last question here, and then we'll wrap up. Question from Broad Scaler: how much is AI driving ETH right now? You have any thoughts on this, Mike?
Yeah, so I would say it's starting to it's coming. I wouldn't say we've always had bots, right? So we've always had sort of machine learning and algorithms and things happening on chain. I think we're going to continue to see more of it, and as that gets more sophisticated, where they become on chain agents that are actually doing stuff on behalf of users, that is when we should see activity really take off. And I think stablecoins are a huge piece of that. But I would say right now, like it's kind of where we were at, similar to where we were at even a couple of years ago. I'm looking for the agents themselves to become more sophisticated, and then them to start using stablecoins. And to me, that I haven't seen that just yet.
Not seeing it in the data then yet.
Not seeing it in the data just yet. Yep.
Audience, thank you so much for joining us for the Q2 ETH report. You can get access to the deck, of course. I'll give you that again, the DeFiReport.io. There's also these analytics. All of these graphs are available to you in Dune, so you can play around with them. You can look at them in real time, which is a benefit of having all of this data on chain. Just type in the ETH report in Dune. You should be able to access that. And Bankless YouTube, of course, for a live stream of this update. The next time we do a quarterly call for the ETH report will be at the end of Q3. So I think we're targeting somewhere around October 15th for that. So stay tuned. And if you want to receive that in your inbox, go to the DeFi report and type in your email address, and that'll come to you automatically. Also, lastly, Mike and I are recording more of an opinionated episode on both Ethereum and then another report that Mike has come up with, Solana. We're going to be recording those episodes in the next day or so and get them out on the Bankless podcast. So this was a bit more of kind of the just the numbers analyst, just the numbers perspective. We're going to give you some more opinions on these results on an episode on the Bankless podcast feed to follow. Thank you so much for joining us today. Thanks to Bit Digital for sponsoring the ETH report, and